Can everybody hear me? Let me see. Chat. Yep. Okay. Cool. Just trying to make sure that the YouTube is straight, so that one is good, and then I'll start. Play some music or something.
All of that ass you carrying, you gotta be shit. Your girlfriends. You don't give a
in my church.
What's going on, everybody? I'm going to just give it like 5 minutes, and then I'll jump on and everything. I just want to give a couple more people some time to start, and some time before it starts, and I'll jump in. Okay. So enjoy some Anderson Pop. Right. We'll start at 8:05. All right, just to give it a little time.
I gotta use the bathroom real quick. Hold on.
Sorry, Mom.
What?
You okay?
I'm good. Why you sending all them backhand pointing finger
Because you didn't want to read the message.
theory like? You just sent the backhand emoji, finger pointing emoji. Back.
Gonna start in 2 more minutes at 8:05.
Can you give me a paper towel? Please. All right. What's going on, y'all? Let me get this headset in so y'all can hear me better. All right, can y'all hear me good? Was it better the other way or this is good? Okay, cool. What's going on, man? I appreciate y'all. This is cool because I wasn't even expecting it. K Dot just jumped on, was like, "Hey, man, I need you to do a session, and if you will do it, I'll just let everybody know." So I appreciate the love, man, for everybody who's showing up and jumping on. So I decided to kind of give a rundown of what I thought would be a good idea to go over, and the couple things that I wanted to go over were to give me one second. Couple things I wanted to go over, and kind of a rundown of what we'll talk about. We'll do a rundown about that, and we'll start with markups, go over mindset, entries, exits, alerts, and like any other kind of like question that you guys might have. I'll turn it on, and you can just ask away. So I'll kind of go over like the concepts of what I'm looking for when I'm entering my trades, and how I exit my trades, what I'm looking for as far as my TPs, my stop losses, and what I'm looking for as confirmation for exiting my trades. And then, a lot of people that are taking Kim's trades, or there's a lot of people that are taking their own trades. So you don't have to like sit at the computer screen. You can set your alerts once it gets to a certain price. And a lot of people ask about how to set alerts, what apps you use, what's available for you to use in order to set alerts. So I'll kind of go over how I set my alerts, and what I use to set my alerts when I'm trading, and also some other alert applications that are good to use as well. So I'll go ahead and start it off by showing you my markups and how I mark up the market and what I'm looking for when I'm marking up the market. Okay, that's good. And we got some people. Let's see where everybody from and see how many people we got on here. Got like 23. That's 24 people. Where everybody from? Ireland. Shit. Ireland. Whoa. Shame. That's cool, man.
I think I'm hungry, mommy.
Canada, Jamaica. Whoa. I didn't know I had that kind of demand, man. Get some international clout. Okay. Know you, Vancouver.
What?
That's what's up, man. St. Vincent, Toronto. Okay. That's what's up, man. I didn't know I had people ear like this. That's good, man.
Possibly we can get
That's
me,
what's up, man.
his mother
How
set
many
up as like a
people
permanent
have been
person. So that
trading
way, if
for
I want to,
over 3 months now?
They won't have a problem.
Over 3 months. Drop it in the chat.
Yeah.
If you've been trading over 3 months now. Okay.
Yeah,
We got
anybody outside of me.
couple. Okay. Anybody trading over a year now? Been trading a year.
Avions.
Anybody? Okay. We
552.
okay. Okay. How's your success been? Like, are you full time? Are you working full time? Are you trading full time? Or are you sometimes like what's going on? 8 accounts, bro? Ah, damn, man. That's okay.
503
That's okay.
32.
8 accounts blown. That's still that's justifiable. We okay. Full time.
So try
Okay.
this. Yeah, 503 349
Tati, my girl Tati. Okay, cool. That's what's up.
3305.
Switching between strategies. Okay, that's kind of where I was kind of gonna head towards, man. So
Yes.
when you guys are trading, you have to find a strategy, right? You have to determine like how you're gonna trade. You can't like keep hopping and jumping and going from one strategy to one strategy, right? I'll tell you this, like when I first started, I was looking and trading.
Just
I
let
was
them
trading
know.
stocks, and this was like
I'm
4
sure they
years
know
ago.
who
Let
he
me
is
mute
because
somebody
he's there.
right quick. So yeah, I was trading stocks, right? And how many of you guys have
Like I said, he blown 8
been
accounts.
searching through Facebook, and because you've been searching through Facebook, YouTube or whatever it is, how many of you guys have been looking on YouTube and you saw this guy named Tim Sykes or this guy Ross Cameron or something like that? These guys were trading stocks, right? So for me, I started trading stocks, and you know, that was cool. That was good. I did okay with that. I blew up a 10K account and I blew up a 5K account, and you know, I was learning. You know, I thought that I knew what I was doing. Like as soon as I put money in my account, as soon as I was like, oh, I'm gonna open up a trading account, I just assumed that once I start trading, I would automatically be successful. You know, some of the times that I got in some of those trades, I was leveraging pretty much way more than I should have been. I was I would lose some days, jump strategy this day. I was learning from Tim Sykes videos. I was learning from Ross Cameron videos. I was debating whether I should trade Forex. I was just all over the place, you know. And then, you know, I decided that, you know, I took some time away from trading and I decided that I'm gonna get into Forex, right? So in making that decision, I met Lizaldo, Mr. Teacup. Mr. Teacup, you know, he and I lived in the same apartment complex. He and I stayed in the same building, right? And he told me about what he does and as far as the Forex situation goes. And he was like, man, I want you to come up under me, you know, just try it out, see how you like it. Got into it, didn't really jump on the bandwagon at first, you know, and I started trading a little bit, started researching Forex, hopped from this educator to another educator until I got into Kim. And I say all this because it wasn't until I focused and keyed in on that one educator, right? I learned how to trade their style, right? And once I learned how to trade their style, like I have not missed Kim's session since 2018 of October. Maybe out of those times, I've probably only missed like 3 sessions. And I'm not counting the new sessions where she's Tuesday through Wednesday, because sometimes I miss those because I still do work, you know. But a lot of times I'm on those sessions, I'm just not as active as I am on the regular sessions. But I say all that to say that I reshape like how I live, you know, how I work and what I do for it. Like I reshape everything in order to put myself in the most optimal position to trade successfully, right? And I stopped jumping from strategy to strategy. I stopped jumping from group to group, you know, all the Telegram groups. I stopped paying attention to those because you start to get over information, you know, you start to get, you know, overwhelmed by so many different people telling you, you know, that you should trade like this. This is the best way to trade. This is the best strategy. This is the best way to, you know, the best pair in the world to trade. Like it gets consuming, you know, it gets overwhelming. So I say all this to say, just you have to lock in, you know, you got to lock in on who you want to follow. If they're a successful trader, stick to those guys. Stick to the educator that you feel gives you the best opportunity to be successful. If you guys like Dr. Kathy, if you guys like Lizaldo, don't hop, you know, just make sure you know everything that they have given that's available. Make sure you understand how they trade to a point where you can take what they have taught you and make it your own. Like, so at the point where I am right now, I learned Kim's strategy, but I also trade, can't hear you. You guys can't hear me? Okay. Hey, I'm gonna ask everybody to mute their mics. Somebody with iPad and Tia Lee, I'm gonna mute you, and I'll open it up for questions at the end. So yeah, again. So as I was saying, so like I took everything I learned from Kim, and I locked in on that. And so moving forward, now fast forward a year and a half later, I can trade Kim's strategy. I can trade her strategy to the point where I could teach it to anybody. But I also have been able to adapt it and make my own strategy based off of that. So now I'm able to, I know what Kim's looking for when she take her trade. I also know when I see things on the chart, how I take my own trades, and sometimes you have to just lock in on that one individual trader and learn how to take their strategy first and then make it your own. Like it's been said, it's to the point where it's cliche. In order to be successful, you have to learn from somebody successful. And once you learn from that person that's successful, then you take their strategy and you can make it your own. Okay. So I'm gonna get to the charts. That's my mindset portion. And then we'll get to the chart. So the first pair that I got up right now, I got up gold, right? This is Luke's baby, right? But I'm gonna use this pair to kind of mark up so you can see what I'm looking for from a top-down perspective, right? So I mark up from the weekly down to the 1 hour, right? But when I take my trades, the only thing that I do different from Kim and Luke and whatnot is I focus on certain time frames of the day to take my trades. Like, so I don't want to be in the market all day, all night. I don't want to be up at 3 o'clock in the morning. I don't want to be the trader that's just living on the chart. So I only focus on the moves that happen during the time that I want to trade. So in my case, I like to trade during the market open. And that is between 9:30 and 9:30 Eastern until noon, around noon. And then I'll take a break, and then I'll try to get back in around 2 p.m. until around 4 p.m. because the pairs that I trade the most, gold, US 30, the NAS, those pairs are the most liquid during those times. That's when you got the most volatility in the market. So I tend to stick to those, right? I trade FX pairs when I'm just practicing something or when I want to test something out, right? So from a weekly perspective, I'm looking to find my zones, right? And there's a lot of ways you can find the zones, but a lot of times if you are just eyeballing the chart, you can find your zones, right? So right here off bat, because this is where I am recently, I know that I got these touches over here, 1, 2, 3, 4, 5, 6 touches. It broke right here. So we know that over the long-term perspective that this weekly area, where it is a good area to consider as a zone, right? Still can't hear me. Can't hear me. I hear you. Okay. All right. So a good area for me to consider a zone, which is exactly where we're trading near right now, right? So if we look at this, this will be the most prevalent area that we're trading from, and we just broke from this area, right? Even more recently, you got this little zone right here. Won't be able to see it a lot so much on this weekly time frame, but if we break this down to a daily, you'll see why I added this level as a zone right here, because we got a break here, we got a break here, we got a retest here, we got another break here and a retest here. So that counts for me as a zone. Plus we got this cluster of area right here that's causing some consolidation right here. So between this zone and this zone, we got consolidation, we got a break, we got a retest, a break here, and then we got a retest of this zone. So this is the current zone we're trading from right here. We come from a daily, like I could break this down a little more to where I'd consider this zone, but consider this area right here. It's another area to consider. We got a break, we got a retest, consolidation, and we're held right here. We got a retest right here, confirmation that this zone is still valid, and then we got a break. So I'll be trading from this zone off the weekly to the daily time frame. To the daily time frame, we still got to go out a little further. This wick is confirming that we got a nice little area right there to consider. This wick is confirming that when because we know we got this area to consider, because that's what the wicks tell us. The wicks tell us at pretty much where we have sellers coming into the market, or where we have new buyers coming into the market, right? So we'll take that and consider this as an area we can trade from. Then on the 4 hour, which is my favorite time frame to consider, is we have some other areas to consider as zones on the 4 hour. And then I'll mark this level here. Looks like this level here. And that we'll leave it at that for this. Let me make this a little bolder. Make this line a little thicker. And you know what I like to do is, when I'm putting in my zones, I like to know where they came from, right? So I'll mark this off like this is a 4 hour zone, because something on a zone on the 4 hour is a lot more prevalent than something on the 5 minute, 1 hour, or whatever the case is, because I want to know where it came from, because I want to get an idea of how strong the zone is going to hold, right? So if I got something that's happened on the 4 hour versus what's happened on the 1 hour, I'll consider what's happened on the 4 hour a little more so than I would on the 1 hour, because that has given a longer time frame. That's on the longer time frame, so I got more confirmation that this area will hold versus another on a lower time frame, right? So I got my 4 hour, right? Down to the 1 hour, right? Got a little area right here I would consider. And I'll mark this 1 hour zone. And for me, that looks good enough, right? For me, that looks good enough. For this little area, right? This is where we are right now, right? So from a weekly perspective, this green or olive colored area for me, that means that we're trading at the low of this zone right here, right? We have a 4 hour zone to consider before it'll break out, right? And in doing so, I'm looking for this setup, right? ABC setup, right? I got my 0, my A, B, and C set up, right? So in my A, B, and C setup, I'm looking at this to be, this is how I get my, this is how I determine like how the direction of the pair, how I get my TPs, and I'm always looking for this A, B, and C setup. But in doing so, you know, this a breakout of this zone right here, right? I'd be looking for the same thing on the downside, right? So say we break out from here, 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 right? So I'd be looking for a breakout above and below the zone, right? And I use this ABC to set up this ABC concept so that you kind of understand like where you're looking for when you're looking for a break in a retest, right? So your 0 to A, that's your first move. In most cases, especially when you're trading gold and US 30, your 0 to A move is usually about 30 to 50 pips, right? Now, lately, the 0 to A move has been happening and it's just been blowing away zones, right? So sometimes, you know, this 0 to A move might be the B to C move too. So you don't get the retest or it doesn't come immediately, right? So, and what you have to look for, you have to look for 2 different types of trades when you trade breakouts, right? When you trade breakouts, you look for an A to B move. I'm sorry, 0 to B move. You have a A to B move, and you have a B to C move. That's how you trade breakouts. If you want to take, if you're trading near a zone, like a top of a zone, and you know you're in a situation where you could likely get a breakout to the upside. Sometimes the way you enter that is you enter in market once you see the zone getting broke, or you put buy sell stops at the top or the bottom of that zone, so that way you can catch the 0 to A move, right? Sometimes I'll take the A to B move, but that's a sell in this case, or that's a buy in this case, right? But in doing so, the only way that I'm taking this A to B move is if I start to see wick rejections in this area, and I get a confirmation that this is pushing back down to where my initial breakout was. When you get those TPs, and you get that setup that looks like it's about to break, right? This B move, the B to C move, that's when you get those elongated TPs. That's when you get those TP1s, TP2s, TP3, TP4 areas. Like, that's where that come from. When you get a call from Kim or any other trader that trades breakouts, like this B to C move is actually where they're looking to get their TPs when you were trading a retest, right? So, and if I'm looking for a retest on the buy or the sell side, right, I'm looking at these areas. So like, if I'm trading to the downside and I'm trading this as a break, right, my first TP area would be right here. This is the most recent area of rejection or break right here. So in this case, this consolidated. This once was, let me get another box. Let me show you something. This area right here was a previous area that it broke from. And let me change the color, right? Change it to yellow. Change it right here. I don't know, that doesn't look good. And then this doesn't look good at all. That's not cute, but who wants cute? Who just want to get this knowledge, right? So anyway, this area was a previous area that it consolidated, and it's pretty much in this same area of consolidation, right? But it broke, right? It broke from here. And when it broke, it pushed down, came back up, and rejected right here, right? So when you're looking at this area, right, you're likely to get your first TP between this bullish high and this rejection area right here. So my first TP, which would be a breakout from this area, looking like 92 pips right here. So this would be where I would likely get my my 0 to A move right here at this area. And I know this is an area to consider because we got consolidation over here. We got a push down and a rejection right here. We have a rejection right here, and we have a breakout from this area, right? So I know I can at least get to this area where it started to turn around at right here. So that would be where I would put my first TP if I was trading this, right? My B to C move would give me the remainder of my TPs, right? So I would be looking to trade my breakout initially from 0 to A. My B to C would be back to my A right here, right around here. My next TP would be likely right around here, an area that it broke, kind of consolidated near. And then let me mark that right here. And then my final TP would be right around this 4-hour zone. And you have the option at that point to trade down to the zone or close out like just before the zone, just so you make sure you lock in profit. So that's what I would be looking for something like this, right? these are my these would be my targets as I'm trading. And you use wicks. I use wicks to define my targets. I use previous structure to define my target. So in this case, I'm using this wick, this structure right here, this rejection area right here. And if you want to trade it all the way back to down to the zone, you got this rejection area, you got this wick to trade down from. So you could actually build targets all the way down to here. I think that's a little extreme to go that far down, because as long as I lock down 1, 2, you know, or even 1 in some cases, if I'm twin trading, then, you know, I'm good with that, right? Would you recommend trading a breakout and the retest? Absolutely. Absolutely. You know, I absolutely recommend that, because that way you maximize your money. You know, that way you are taking advantage of the moves that the market gives you. Like, you don't be, you know, susceptible. But the only thing I would say to that is sometimes you're a better breakout trader. Sometimes you're a better retest trader. And depending on what you are more successful at is what you should trade. If you're good at both, you know, then trade that. But if you can't grasp the concept between one or the other, trade whichever makes you the most comfortable. Trade whichever direction or means that makes you feel that you are the most comfortable with. So when I look at the difference that the things that I add into my trading that are probably different from some other traders is like I said, I look for moves that happen at certain time frames, right? And I key in on like 4 different candles, right? Let me open up my MetaTrader and let me show you. So I twin trade, right? And for me, like sometimes that I trade, like I'll enter like my first order to like test the market, right? And to see if it's gonna go in the direction that I want it to go in, right? Let me open up a new, no, I don't want to open up a new chart. Yeah, I'll explain all my stuff to you. So I kind of like focus on I focus on 3 different candles, right? How do you manage your trade, Corey? Multiple positions from entry to each TP? Do you trail stop? Yeah. So the way I manage my trade, so like I said, I'll enter my first order. You know, when I see that a trade is near my entry, right? And if I get the rejection that I'm looking for, then, you know, I'll go ahead and take that first trade. And once it gets back near that initial entry, then I'll start adding on as it goes, right? So for me, I focus on 3 candles in particular. The 9 a.m. candle on trading on MetaTrader is the London open candle, right? Let me go to this one's a little cleaner, right? This is a little cleaner. So let me grab this, stretch it out. Here, right here, and that's good, right? So I focus on certain candles. I don't, like I said, I don't like to be in the market that long, right? I don't want to sit up all night and focus on that. So what I do is I look for the 9 candle on my MetaTrader, which is this candle right here. And then, so I focus on the 9 to 10 candle, which are these 3 candles right here. Let me zoom in. This is the 9, this is the 6, and this is the 10 candle. And those are the 3 candles that I focus on mainly. I also add in the 2 o'clock, that's 21 candle. So your 17 candle, so your 9 candle is the 3 a.m. open for London session. The 6 a.m. candle is the 1300 candle. And then the 17 is the 10 a.m. candle. And then the 21 is the 2 candle, right? Those are the times when the market moves the most. So what I usually do is I look for, when I wake up in the morning around, wake up around 7:30, 8 a.m. or whatnot. The first thing I do is I go and I see what happened in London, right? I'm looking at this 9 o'clock candle, right? The 9 o'clock candle implied, let me remove this out of the way so we can see the wicks. The 9 o'clock candle right here implied that we might have some bullish move, right? And the 9 o'clock candle said I'm going to say the London candle told me that we are likely to have some bullish movement, right? And because I'm seeing that kind of gives me a key to the direction of the market, right? So if I do get a breakout, it'll likely be a breakout to the upside, because London is the first period of the session where you get a lot of volatility brought back into the market, right? So that's when the outside of the US, the London session is the most volatile. So I key in on the fact that I got a bullish move right here. The 6 a.m. candle, which includes the 8 o'clock a.m. time frame, confirms that, right? So as I'm looking at this, I'm like, cool, okay, I kind of got an idea of the direction of the market because I got this move up. So from my 4-hour window, I got the idea of where the market should go, right? When I'm looking at this same area, right? I'm looking at this, I come down to the same area on the 5-minute, right? So this is this same area. This is that same movement right here, right? That I'm looking at on the 4-hour. You can see it right here. When I'm lining these up together, that this is around this same area of price action, right? Which is, let me mark this little area off right here, 1600. And we'll come over here and mark that little area off right here, which is around 1600 over here, right? So this same area, right? So it's actually over here. This same area of price action is right around here, right? So I'm looking at this area and I'm seeing is that during London session, right? I have confirmation that this area could possibly be bullish. So when I'm seeing this on from the London perspective, it's telling me I should buy. Then I get a movement between the 6 a.m. candle into the market open candle that confirms that. So a lot of times what I'll do is, if I'm seeing that this is pushing up on the 4-hour, I come down to the 5-minute and I look for my entries from that point on, right? So I'm looking for my entries from that point on, right? I'll look to say, maybe this is my first entry, because this is near around the time the market opened. And I see that it's pushing down, but I've already got confirmation that if I start seeing rejection, that I could likely take an entry over on this trade. So I'll probably enter my first trade. I enter it right here, right? Once I start seeing the rejection back near this area. My next trade, I might enter it right here because I'm seeing rejection right here. My third trade, I might enter it right here because I'm seeing rejection right here. And once I see that I got rejection and push up, guess what? I'm already in the trade when it's expected to break out from this area, right? Because my whole idea was that it was going to either break out from this area it consolidated, and then we trade to break out of this area right here. But I'm already in the trade. Another example would be something like this. Like this is what happened today, right? Today, this was my 9 candle, this was my 6 candle, and this was my 10 candle, right? At 9, the London session said we're going to go down. The London session said, if you want to trade this area, which we already had established on the 4-hour time frame, you want to trade this area right here, right? From here to here. On the 5-minute candle chart, this what this little area look like, right? Let me zoom out right quick so I can grab this and box it, right? Basically, today, we would have been looking at this setup, right? From basically from here to here, right? To trade the breakout of this, right? So me knowing that that this has a potential to push down based off of this 9 candle, I see that the 6 a.m. candle, which is the 1300 candle, kind of confirms that we got some rejection near this high, right? As this tries to push up. So if I'm looking at this, I'm trading near the extremes of these candles, right? This zone has the extremes up here where we got a lot of wick rejection up here and it's near zone. I got a lot of wick rejection down here near zone, right? So I'm looking at where I could take advantages near the zone, right? So if I'm seeing that on the 4-hour time frame that I got rejection, and I got confirmation on the 5-minute time frame that I have wick rejection, I'm going to take my trades to the downside from here, right? And if you look at it on the 5-minute time frame, this looks a little like this. The way this looks is it pushes down, push back up on the 5-minute time frame. Let me zoom in. What this looks like and what I look for my entries on there. So I know I got rejection here. I got a confirmation wick here. I'm selling from when, even though I see that price is pushing up at this area, because I got this long candle of rejection, that's where I'm entering my trades. The next time I start seeing that I'm getting rejection. So what I'll do is I'll put a stop right here. Once it pushes up above this area, I'll try to get in as high as I can, right? So if I'm trying to get in from the top of this wick, but if it doesn't push back up, I'll start trailing my move upwards until I start getting the trade to push down. So I'll enter like right around here. So my first trade entry would be right around here from the top. And this is actually when price is going up. So what I'll do is I'll put a buy stop, or I'm sorry, a sell stop above this area or as the price is going up. So that way, if it comes back down, it'll automatically pull me into this trade, right? And that would be where my first order would go in. If I'm looking at this again and it pushes down, I'll see that it's coming back up to this area. This would be my next area that I would put another trade in, because now it's confirming that this area is valid as still a resistance area. So I would have my second trade in here, and sometimes I might, if I know that I'm trading near a resistance area, I might put 2 trades in right here, 2 trades in right here, and just ride it down. So by the time that it actually breaks out of this area, guess when I actually got in the trade? Everybody's waiting for this move, but I've been in it from this move here. When it finally gets to this move, I'm adding in another order right here, right? So I'm adding on to my trade right here as it's breaking, and I'm taking the ABC from here, the 0 to ABC from here. I got 1 trade in right here. I got 2 trades here at the top, right? And then I'm pushing down, and I might enter another 2 trades right here when I see that it's breaking. Once I start seeing a wick, right, and I get confirmation this is my zero, my A to B move right here. I'm likely possibly putting in a trade right here to the upside to get to the A to B move from right here to here where it broke out from. And then I'm selling here back when it's at B to get the retest move right here. If I'm kind of making sense, I know I'm kind of talking a little fast, you know, but I hope I'm making sense to everybody. So, and I'll show you again on a trading view, the same thing, right? Same thing, right? So you see, I got my rejection, right? Zoom in. Zoom in, right? I got my rejection. I know this zone is valid, right? Can see it a little better on trading view, right? I know this zone valid, right? And then let's look at this from the 5 minute, right? Same area from the 5 minute, right? I know this zone is valid. Lock this. I know this zone is valid, right? On the 5 minute, right? I see that I've confirmed that I can trade from the top of this zone. I've confirmed that from the 4 hour that this zone is valid, right? So I know, like I said, I got my break over here, actually, sorry. Got my break over here. I'm already in up here. I know I can take a trade from this area as well. I can show you several examples that this same setup took place, right? So that was today where I took a sell to the downside. I only traded this top move, these two areas right here, and I traded a break on gold, right? I can show you another example where this same setup. So back on MetaTrader 4, right? Another day, we have that was news. Another day, we have that same setup, right? Got our 9 o'clock candle right here. Like perfect setup. And I took this. Let me show you the last trade. Let me show you my this US 30 trade, right? I took the other day. So 5 minute, okay. Can you mute everyone's mic? I thought I did. Is this considered scalping? No, not so much considered scalping. I just use the 5 minute to enter in for a long-term play. Like, you know, I just use the 5 minute to enter from, you know, it's not so much scalping because it's a day trade because I'll stay in it as long as it's moving in the direction that I want to stay in. Scalping is I'm in for 5 minutes and I'm out, you know, 2 seconds later, I'm in and out over and over again. So yeah, I bought A to B, and in that last example, I bought A to B, and I also sold 0 to A, but I was also in before that. I was in at the rejection. You are in from the top and the bottom of the consolidation. Yep, I try to get in near the key rejection area. So either I'm trading from the bottom or I'm trading from the top until I get a breakout in one of the direction. Okay. Let me mute everybody again. All right. So let me trade the top or the bottom. I trade from the top and the bottom. I trade from the top and the bottom of zones, right? And I also trade the breakout. So yeah, it's sorry if I'm confusing you, but I can explain it a little differently. So like I was saying earlier, from On the 9 o'clock candle again is what the 9 o'clock, 6 o'clock, and the 10 o'clock candle is what I'm looking for. This setup right here, right? These 3 candles, right? Again, I repeat, like 9 o'clock candle, it tells me what London's did. It tells me what was going on in London. It gives me an idea of where the direction of the market is going to go, right? And if I'm getting a lot of selling on the 4-hour time frame, on the lower time frames, those usually stay in the same direction from the higher time frame until you get a change in direction. When you're near a zone, or when you're near key support level, key resistance level, right? So when I come in, I'm looking at my 9, 6, and the 10 candle, right? So my 9 o'clock candle, which is the London candle, this tells me that it's pushing down, it's rejecting. So I got the opportunity to kind of trade in both direction on this in this case. So if I'm trading near the extreme of this 9 candle, I'm trading near the wicks, right? So if I'm looking at this, I would be buying from from the low of this 9 candle or the low of this 6 a.m. candle, the 1300 candle. But I also had an opportunity to trade near the top of this as well for a sell, which would have gave me a good move as well, because between these 2 candles, if I'm up at like I said, I'm up at around 7, 8 a.m. So by the time I'm up in the morning, I'm looking at this candle, and these 2 have already formed, right? This candle has formed to sell. This candle has formed to sell. So if I'm looking at this, I'm gonna take my first trade near the wick, right? So if I'm near the wick, I'm looking for price to push back up, and I'm gonna start looking to sell as it gets near the high of this wick, right? So in this case, I would have put a trade in like somewhere around here, somewhere around this area, because I've already got it confirmed that this is selling off, right? This candle confirmed, this candle confirmed. And if I start seeing rejection near this area on the lower time frame, I put my first order in right here. And then once I start to see that it's pushing down on the 5-minute, like then I'll come in and I'll start adding more orders to that, right? And until I reach back down to the area of rejection, right? So my goal would be in this case to trade from here where I entered down to this zone, right? That's kind of what makes it not a scalp, because I would be trying to hold it for this whole candle down to the zone, right? Which would be more so of just a day trade versus a scalp, right? And then if I start seeing rejection near the zone down here, which you start seeing the rejection near the zone, you start seeing that rejection around the 2 o'clock time frame. That 2 o'clock time frame is where you start to get a lot of new buyers into the market that are either trying to take the trades into the opposite direction, or they're closing out trades because they were in the sale already from the top, with the same area where I sold from, right? So you'll have people that sold from here down to here, or from here to here, and then you'll have people that are buying from this low to this high, right? And they'll be trying to trade the same concept but in the opposite direction, from the support zone to the high, right? And those guys are, in this case, they're going to get in the market around 2 p.m. because that's when people, coming back from lunch from the U.S. market, that's when the volatility picks up, because you got a lot of swing traders that are getting into the market that are trying to open up new positions to take it up to the upside or to the downside from whatever time frame that you're looking at, right? And then you'll have those same people that are closing out those trades. The indicator for the sale is respect plus wick. Exactly. So when I see the respect, when I start seeing that the wick start respecting a certain area, that's when it is, right? That's when I'm getting in my trades. Just like I'm looking for the buy over here. I'll be looking for the buy over here, right? because I'm starting to see that this area is being respected. It looks something like this on the 5 minute, right? I got the wick right here. The wick from the 5 minute shows massive rejection, right? Over here. I might put an order in right here, right? My next order, if I might take this move up and just get out right here from back to the break, right? From here to here. I might take this move up and get back out because it's starting to reject. So so in my head, I'm like, okay, this could likely turn around, right? So if I don't get into this move, I'll get into the move from here, from this area of rejection. I'll put my either here, I'll put my first order in here or here. I would likely put it in right here because I got confirmation that this wick is valid and it's holding right here. The same, it rejected it near the same area. So I'll take this first move up from here, more than likely. And I'm getting in my trade and I'm trading it at least back to where it broke from, right? That's my A to B. My A to B move, right? And I'm looking for that area of rejection as my target that it broke out from in this area right here. Broke out from here, and I'm at least trading back up to this area, right? If it breaks down again, like it did, and I start seeing rejection, I look for the next swing to confirm, like either I'm going to stay in that same direction that is going for the sell, and when for the sell, or I'm going to take this down, take this back up for a buy. Does this mean you are glued to the charts within those times? Exactly. Within that time frame, that's when I'm on the charts. Like I'm looking for these moves. I'm looking for the breaks. I got two screens open. I got two charts open at the same time. I got a 4-hour chart open and I got a 5-hour chart, 5-minute chart open, and I'm looking for the moves to happen, right? But like I said earlier, I only trade during times when the market is most likely to move, which is between like 8 and noon and then 2 to 4, right? So if it doesn't happen between those times, I'll miss out, reanalyze my charts, from based off of where it is at the moment. And then I'll look for my same setup on those on the London candle, the 6 a.m. candle, and the 10 a.m. candle, and the 2 p.m. candle. In this case, and if I'm looking at this, I'm seeing that I got rejection here. The first place I would enter is I know that once I see this move going up, I got rejection. I got strong rejection from this wick right here. I'm entering in on this wick, on this candle right here to take it back down over here, to take it back down from here, right? I got another confirmation when I got this wick. This candle makes this wick down here. If I see that it pushed down below that, I got another entry that I'll take to take this down right here, right? So if I see this push down below and come back up and start rejecting this little wick right here, I'm entering in right here and I'll take this down. So when I'm making my my ABC move to the downside from here, right? In this case, I would have been trading this ABC move to the downside, right? I'm looking at my wicks to confirm this, right? To confirm this move down, right? Better example would be right here, right? So from this zone, I got this confirmation that this is pushing down. Let me grab this. Let me do it over here. ABC, right? So from the opposite direction, I'm using this candle. Let me zoom in. So if I looking at that setup that I just mentioned, right? We got our time frame right here. This is between the London and the 6 a.m. candle. Then we're over here around 9 right here. I already got rejection up here to say that this is likely going to be a sell. I'll box in this little area. I'll box in this little area, and I'm looking for a ABC setup from here. So I got my rejection here. I got my push down, and then I'm coming back up to this area. My move would be from here to here to here to at least here, the bottom of this area, right? This one was a little choppy on this one, right? This one was a little choppy because you got some moves back up and down, but the main move I'm taking, I'm entering in a trade right here at the top of this area. I'm entering in another trade when I see it reject this area, and then that would be my entries right here. And I'm exiting when I see that I'm near the next wick right here. One of my trades I'm exiting here. The next one I'm exiting here. And then I'll likely leave it in until I start seeing that I get this rejection off of this candle right here. Somewhere around here on this. Whenever I start seeing this rejection, I start to exit when I get these wicks to confirm that this is done, this move is done, right? And this could take 2 minutes. This could take 10 minutes. It could take an hour, 3 hours, right? But the whole concept is I'm not entering to like scout, but sometimes it turns out to be that way. That move yesterday when on the 5 minute, when the market like shot up based off of this move right here. This move, hold on, this is not the day. The move yesterday when on this candle on the 5 minute, right? This was when they released the news about the rate, right? When they released the news about the rate, I was like, what? I start seeing the rejection, right? I started seeing the rejection right here, that this area. So I boxed in this little area over here already, and I start seeing that it was wicking. So I put my first order right here. I saw that it wicked again. It was starting to wick again. I put another order in right here. So this whole rate move, out of nowhere, I caught this whole move over here. And then I took it back down as well, because I started seeing rejection, right? I was in this move and I was in the move to the downside. Yep, I was entering in from the 5 minutes, right? So I kind of got ahead of everybody. When everybody took that loss yesterday, I was like, yeah, I mean, I'm good, because I took this for like a stack, you know, this rate move right here. And then I also got in to the downside as well once I saw that this was rejecting right here. But because I got this strong move up, and then I was also listening to Bloomberg and CNBC at the same time, and you could hear that they were not favorable of this interest rate move. They were like all talking crazy about like how they don't think that this is an economic issue. This is related to coronavirus. They shouldn't be cutting the rates because this has nothing to do with the current economic state. This is all related to the fact that something of natural causes. So when I started to hear that, I saw this move, I saw this reject, and I saw that this candle pushed down below, came back up. I got in right here. Once I started seeing it reject, I put 2 orders in right here, and I took this move back down to this zone right here. But I knew I could do that because I'd already got confirmation that this was not going to be a valid move to the upside by these wicks, even on the 5 minute, you know, because where we were on the 4 hour, yesterday was here, right? That was this right here, right? That was this area right here yesterday. And you had a move at 9 a.m. that said that this was bullish. Then you had an opposite move at the 6 a.m. to say this is bearish, right? So in this case, this could have gone any way, right? You could have actually took this, like I said. So you really be catching moves from off the market exhaustion on 5. Yep, I do, because I use my zones from the 4 hour to confirm my moves, right? So if I'm looking at it from the 4 hour and my zones, or if it's trading near a zone or the area, a key level on the 4 hour, and I trade it from the 5 minute, those moves are more valid. Those zones are more valid, you know. So if I'm not likely to break the zone on a 5 minute chart, I'm not likely to break a 4 hour zone on a 5 minute chart, right? Yeah. So I like to sniper into my entries, right? I like to go in at the extremes, you know, like, so in this case, right? Once I'm looking at this area, right? And I saw that it was rejecting, right? I used a little area of consolidation on the 5 minute chart to kind of see where I could get in, right? Let me show you. Let me zoom out a little bit, right? So this little area right here, it broke, came down, rejected, broke, came down, rejected, right? So I use that little area to kind of confirm, like, all right, if it gets near this area, which on the 4 hour looked, this same area on the 4 hour was right here, right? This wick high, right? So I use this wick high to be able to get into this move to the upside. And that's this area right here where I entered in the first time, right? Corey, can you catch a move from an extreme tip of a wick? I don't use limits because you're never sure exactly where it's going to turn. So I use I just mark it in, or I use a buy stop. So, and the way I'll use a buy stop, right, or a sell stop is, if I'm seeing that price is up here and it's pushing up, let me zoom in. Let me zoom in real quick. Where did it go? So in this case, I'm seeing price pushing down, right? And I see my first candle that rejects, and that's this little wick right here, right? This wick right here. So from this point on, when I start seeing rejection, when I start seeing wicks, I'll put my order in. I'll see that it started to reject right here. And if it pushes past this, I'm putting my buy stop. Once I see price down here, I'm putting my buy stop like right around here, like maybe 20 to 30 pips above where price is currently. So let's say price is pushing down, pushing down, pushing down, pushing down, and I start seeing the rejection. I'll put my order like 20 pips above, 20, 30 pips above. So that way, if it turns around, we'll see price doing like this. It's pushing down. It's pushing down. I see a wick. Okay, cool. It could turn around right here, right? It's coming down. It's coming down. It's coming down. I put my order in right here. It's still going down. I'm seeing the rejection. Boom, it comes back up. It pulls me even into the order. It pulls me into the trade right here, and I'm in the trade all the way back up, right? I'm even putting another wick order in at the bottom to try to get into the at the lowest point. So I'm trailing my, sometimes as price going down or price going up, I just drag my stop order on down so I can get pulled in at the lowest point or at the highest point, right? So in the opposite direction, I see the confirmation right here. My next candle open up, it tries to push up to the extreme, it doesn't get in there. So in this case, I would have likely marketed into it somewhere around here, right? Somewhere around this base, right? So my first order would have went in, first and second order might have went in right here around this wick, right? As it's pushing back up. And another thing that you'll notice is like, if any candle, and let's look at this live candle, right? This live candle is, when you have a bullish candle, you will notice when you trade it that the candle will push down first, right? Just like it's doing right now. This candle opened up and it pushed down before it pushed up, because that's what's creating that wick. So when I see a candle open up and start to push down first, and it starts to hold at a certain level, I'm knowing that in my head, I'm seeing that, and I'm given the idea that that could likely be a bullish candle. Because if it doesn't just push all the way down, then I'm seeing, and I'm starting to see a wick, that is gives me the idea that it's going to change direction, just like it does in the opposite direction. If a candle, usually if a candle opens up immediately in a particular direction, it's likely, the likelihood of it going in the opposite direction is higher, because what you're basically seeing is the extreme for that time frame be created, the wick of that time frame be created. So in this case, this candle like opened up, it pushed up, it's kind of going, it's wavering right now. It doesn't know what direction it's going to go in, and that's because on this 5 minute, we're near a little area consolidation, right? So because we're near area consolidation, it's trying to determine, does it push down below or does it reverse into the opposite direction? You can see this on all time frames, all the time frames that we look at, right? Even on this 4-hour candle, on the 4-hour time frame, this candle opened up right here, it started to reject, and then it pushed down. You can't even see it that well because the wick is so small, right? Let's look at it on a 1 hour. You probably can see it a little better, right? No wicks right there. This one was a flat top, right? But like in this case right here, like even right now, we saw that this candle opened up. We can look at it on a 15-minute probably. Candle opened up, it started to push down, it reject, and then it started to push up. When as soon as the candle opened up, it pushed up, came back down and reject, and now it's making a little spinning top. The likelihood of the next candle over this time frame is going to reject, it's going to push down and then push up. That's what I'm looking for when I'm getting my entries, right? I'm looking for, like, where is it going to reject? I've already got a wick to confirm this area, right? So if I wanted to take a trade from right here, I'm not saying that I would take this trade because this is not the time frame when I would trade, but I would be looking for a buyer at this point. Even though we got all this bearish move down, I would be looking for like a short-term buy in this case, right? Because this little area right here is a little consolidation area, right? Little consolidation area, and this area is confirming like that this could possibly hold right here by this wick confirming this with the rejection, right? So I'm gonna look for, I would, if it was me and I was trading markets live at the moment, I would look for a buy, because I got rejection on the 5 minute, I got rejection on the 1 hour right here, this little doji, this wick right here. If I go to the 4 hour, I'm starting to get a wick over here. on the 4 hour, same area, starting to form a wick over here. And it confirms that too, because you can use this area, this wick over here, to confirm that this could be another area to buy from, because it's going to take a lot for this candle, this current 4 hour candle, to break through these wick areas, right? So before we get a move to the downside, we'll at least should get a slight move back up to maybe this wick right here, or maybe to this high of this wick right here. So the time frames. So I trade off of the 4 hour and the 5 minute chart, and I trade during London. I trade during U.S. Open at 9:30. So right around from like 8 until noon, and then from 2 to 4. Those are the time frames during our trade, right? And I'm looking for the market to open up and looking for to take my trades around 9:30 to 10 time frame. That's when I'm usually looking for the entries, right? If nothing moves, if it doesn't do what I wanted to do, yeah, EST for me, the Eastern Standard Time for me. So when the market, that's when the US market opens. US market open at 9:30 a.m., but that's for like stocks or whatnot. But that's when the US markets open, Dow Jones, NASDAQ, and S&P 500. That's when those open up. The news usually come out around 8 in the morning about how the markets are at that particular time. So usually I'm trading from like usually, hold on, usually I'm trading from those time frames so that I can get the moves at the most optimal time, right? So I wouldn't necessarily be in the market right now. A lot of times I don't take trades during this time because, as you can see, this is usually a period of consolidation. You do have times like when around midnight, around 9 p.m. Eastern Standard Time, midnight Eastern Standard Time, you'll have you'll have a you'll have a move during those times. There's usually a move, and those coincide with the Tokyo session open around 7 to 9. That's when Tokyo and Sydney session combine. And then around midnight, that's when those same traders come back into the market after lunch time frame. So like just like we have our market open at 9, and then we have our that market open is from like 8 to 12, and then we have the market close from 2 to 4. They have the same thing, but for us, for them, their market opens at 5 to 7, and then their close goes from like 9 to midnight. So you might see a little fluctuation during those times. But mainly the market moves for us during that London session, US session, then US close. That's the main times you see those moves, right? So that's why I kind of stick to those time frames, because I don't want to be up at 3 a.m. in the morning. I just want to see what happened during that time frame, right? So that's why I pay attention to those particular candles, because it tells me, all right, if London did this, if London was doing this, then it's a likelihood that the US will do the same, or the US will do the opposite, depending on what the candles tell me, right? But it gives me, like, if I'm near a zone, right? If I'm near a zone on like this move right here, right? This was the 9 candle, right? Let's look at this move right here. I'm near a zone, little zone right here, right? I took this trade, right? I took this too. And the 9 o'clock candle, the London candle said that this has a potential to push down or up, because I got dojis, I got a wicks on both sides, right? Got some crazy price action movement. So I could take a trade from the top of this wick or the bottom of this wick, right? And that's kind of what I did in this situation. Once I saw this wick rejection on this candle, I started to notice that on the once this 6 a.m. candle formed, I got another wick rejection and near this zone, and it pushed all the way up to this little area right here. I started entering in my trades from this point on here. Once I started to see this rejection on the top side, I started entering in my trade near the high of that previous, near the wick of the previous candle, because I know that I could start getting the string. So once I saw that this wick right here pushed up past this candle, I started to put orders in to the downside because I noticed that it started to respect this area. So I started putting orders in once I saw this push up and rejection near this little level right here at 27,656. And I knew that was an area that it could respect, right? Because I'd already marked this off as a key level inside of this zone that it could reject from. So I started putting orders in at the top of this previous wick, and I caught this move to the downside, right? But I knew that because, again, from this 9 o'clock candle, the London candle said this is likely going to be a sell day. This 6 a.m. candle pushed it to the opposite direction, but it never broke above this level right here, this 26.56. And so because it didn't break above that, when I saw that it was, and I saw that it was starting to reject near that area, I was like, cool. It's confirming that that London move was valid. So I'm going to start putting my orders in once I see that this is getting near this area. And it pulled me in. So as soon as I got into the trade, I was down a little bit because I got in near around this high. So I was in drawdown for like 30, 60 some pips, because it was like 60 pips. I was in drawdown. But as soon as it's pulled back, I was up like 100 to 300 pips. I didn't even stay in this trade long because I stacked in like 4 or 5 orders, and I was good. So I think I took the trade down to around from here up at this high. I think I took it down to like back to this zone, and I just closed out for the rest of the day. And that time took about 30 minutes, an hour. I don't remember what it was, but those are kind of things I was looking for. And I was kind of mad at myself because it just kept going. I was even live trading with Wale, and I think I was live trading with Wale and Miss Marva on this, because sometimes I'll get on and live trade with a couple people. This was a couple days. I don't remember when it was, but I'll live trade with some people that I'm kind of cool with, and we were in this trade. And I remember, I told him to get in. I think he was in all the way down to here, and I got back in and out a couple of times myself, but I was kind of mad, So your stop loss at some other key zone opposite direction. Your stop loss at some other. My stop loss is above the key level. Yep, I would put it above the key level. Because I'm like actively monitoring my trades, I'll usually enter my trades without the stop loss in place. Like, so I'll manually exit the trade once it breaks whatever my area is that I consider my stop loss area. So I might enter my trade right here, and then my stop might be above this area right here, right? So whatever this area is, my stop loss would be right here. Though I might not actually put it in, but I'll just watch the charts to see if it got to this area. Then I would close out the trade manually. That would be me putting in my stop, you know. But you know, if you want to have the stop, and I kind of do that because, you know, psychologically, you know, I don't know if it's just me, but like I feel like when you put your stop losses in, they're stop hunting, you know. So if people, if they see that you got your stop loss in, sometimes I feel like sometimes they'll push the market up really quick, just push it up right quick, snap some stop losses, and then push it back in the opposite direction. And I just stopped doing that. I stopped putting in my stop losses when I initially entered my trades, just because, you know, there's been a lot of times when I put my stop loss in, and like soon as I put my trade in, the price like shot back up in the opposite direction. Like even in this case right here, you can see, you know, a little of that happening, right? So if I'm looking at taking the sell right here or something like that, you see it went down and then it shot back up, but it immediately went down. And if I had my stop in above this area, I would have got stopped out for no reason because it came on back down. So a lot of times I'll just enter my trades. I'll manually exit and enter my trades because I know the areas that I want to look at to get out at, and I know what I would be looking for if I'm looking to if I think the trade is going in the opposite direction, right? So my stop loss would be a mental stop here. My targets, I know where they are, so I would be exiting my trades with you know, using my own exit. So the best entries are with no limits, all manual. Yes, figure that. Thank you. Best, yeah, because you know, it's just you don't know. And as far as my entry goes, you know, I just kind of like, I'd rather manually enter them or use a buy or sell stop, just because like just like this particular area right here. Like once I'm seeing this rejection that's pushing down, you know, and I'm like, oh, I want to take this to the downside, right? Once I'm seeing this, that I got this rejection, that's the first signal that, all right, this could go down, right? And I'm seeing it just go up. So I'm gonna put a buy stop. Once I see it gets above this again, I'm putting in buy stops right here where it started to reject from, right here at this point, right? And then it starts to push up. I'm seeing it push up. All right, if I got a wick up here, I would have probably entered in another order up here, but I didn't get a wick, so I wouldn't have put another order in, but I would have had an order in right here because I see that this started to reject. So once I see that, I have that order in, I get pulled in, it pushes back up, I'm down just slightly, and then immediately it's starting to push down. And that's the way I'm looking for my entries. Like I'm looking for that confirmation to that is pushing down. All right, we got it pushing down here, we got a sell off. And like this time frame right here that we're looking at is the market close. And what happens at the market close is everybody that was in this move from here to here is starting to close out. You had people that got in trades down here for the buy, and they were selling, they were buying and buying and buying. They got to this zone, they started closing out. Some people started taking profit right here. So you got this push down, push down, push down, but it still pushed up. It continued up. Then you got the people that finally closed out of their orders right here. You got people closing out the rest of their orders for the day that were day trading, caused this market to close, to push back down and keep going down. And right now, we're gonna find that price is gonna move, and it's gonna move into a consolidation period. That's between the London session, I'm sorry, the Tokyo, Sydney session, until it finds out the direction that it wants to move. Does it want to confirm and stay and hold one of these levels? Does it want to continue down in the up downside, right? And so that's what I'm looking for as far as my entries, my exits, and marking up my charts. Then the last thing is the alerts, right? So everybody wants to know about the alerts, and you know, the alert situations. Let me grab one thing, the alerts, right? And so the alerts. The alerts. Let me pull up one thing. All right. That's not gonna work. The alerts, right? So the way I set up my alerts on, I use my MetaTrader to set up my alerts, right? And who has iPhone? And you guys got iPhones or Androids, right? Mostly everybody is if you're using MetaTrader 4 on your iPhone, and you go in your iPhone, or if you're using an Android, I don't know how to tell you to get there, but if you look at, you open up your MetaTrader 4 app, right? Go to your settings, and you know where it says chats and messages, right? You guys know how to find that, right? Chats and messages, right? If you guys can find that, let me know on your MetaTrader 4. Okay. When you click on that, right, you get your messages, right? There is a little meta quotes, my MetaTrader quotes ID, right? You guys see that? If you got an iPhone, it's at the bottom of the screen. On Android, not sure where you see that at, but it should be somewhere within your view, right? So remember that number that you see, my MetaTrader quotes ID, right? When you get that number, you're gonna open up your MetaTrader 4 app, right? And then you're gonna go to tools. And under tools, you're gonna go to options, right? And you're gonna look for notifications, right? And when you initially open this up, this enable push notifications won't be checked. So you'll check that, and you'll also check the notify trade transactions, right? And let me turn my volume up right quick on my phone so you can hear it. So you take that MetaTrader quote ID and you add it here into this into the MetaTrader quotes window. And to test it, right? Let me send a test, right? Once you add this ID, you can send a test, right? You'll get a chime like this anytime alerts go off, right? And this, again, it works for Android or iPhone, or probably any other phone that you can download MetaTrader for. All right. And normally when you put in an alert, you'll just right click it, go to trading, go to alert, and there's your alert, right? But if you want to get the push notifications, right, to your phone, you'll take a different approach. Like you won't just leave it, Mine sends me an alert for when I open and close on an order, not for alerts I need to fix mine. No, I'll tell you, Tati. So the only difference is, when you get when you set up your alert. So after you put your alert in, right, you're gonna have to right click on the alert, then modify it. And this is what you'll get, right? Right now, the alert is just set up. So the key things you have to look for: the action, the source, and then the conditions, right? So my source, this gives me whatever the kind of alert I want to put in, right? The condition tells me where I want to be. If I want to look for the bid above a price, below or higher than the price, or at the price. But if I want to get a push notification at these levels under the actions, instead of having sound, you'll use notification. So if I want to get this notification sent to my phone, I would use this instead of sound. And I file and mail, I don't use those, but if you want to get a mail notification, you can get that too. It'll go to whatever default message that you have. But if you want to get the push notifications, once price breaks a certain level, then you would use notification as the action instead of sound, mail, or file, right? So we'll set the notification to set the action to notification. We want to know, let's do bid is below 26. Let's do bid is above 26,820. So we can make sure we get the alert. And then under source, in this case, yeah, MetaTrader 4 for Mac, you have to I'll touch on that after I show this, right? So, once I have the alert, I change the action to notification, and then, I'll usually put some kind of message here, sell at, 26,820, right? That's what I'm putting in the notes, right? And to test it, you'll hear it, and you'll see on your screen your push notification that you'll get the message that I just sent, and it'll go through, right? So next time this pushes up above 26,820, I'll get my push notification to my phone, and I'll get push notifications now that I set up my alert to do this. I'll get the push notification when I get a transaction, when my stop loss moves, when I close out a trade, and then when I break a certain level, right? So I'll just have my alerts here, or have my alerts push my notifications. So I usually put in 2 notifications. I'll put in 1 notification that sounds on my computer, and then I'll come back and put the same notification so that I can get it pushed on my phone as well, right? Yeah. So that's usually how I'll do it. Like, I'll put in this alert, then I'll come right back and just like, bam, here, I got another alert. I want the sound and I want the push notification. So I'm immediately putting in 2 notifications, 1 for the sound. I'm gonna do the same thing at, whatever I'm putting the price in for, 820. So I'll hear it on my computer. I'll also get it on my phone as well. Bam, I got both of those in. So again, a lot of times I'm not even sitting near the computer because I got my alerts. I know, like, even if I'm looking away at something, I got my alert set from my MetaTrader 4. And I don't use like other apps to do my alerts. I don't really use Dractu or call levels or anything like that, because why would I when I got this right here? I got this for me, and like I usually keep another laptop or something open and I'll just put all my alerts on that. So I'll get all my alerts from that other computer that I'm working on or something like that, and just go from there. I trade from my phone, but I usually just manage my trades once I'm already in them from my phone. I don't really enter in my trades from my phone because it's a little bulky to do that. Like, some people good with it. I'm just not. I like to use it from the computer. MetaTrader for Mac, right? They are working on updating MetaTrader for Mac right now. I'm not sure who is a computer geek or not, but I am, and I know what it means. Like, right now, if you have updated, if you're running any version of Mac OS that is above, let me see, Mac OS that is above 10.15, you won't be able to download the MetaTrader for your MacBook. You have to download some type of agent to download the MT4 on that you can run Windows on. Right now, what you're seeing on my platform is I'm running Parallels. I have Parallels on my computer, so I can, it's like $99 or $79 or something. And then sometimes they have sales where you can catch it for like $49. But I'm running Parallels right now, so that this is Let me show you what it looks like when you come out of this version. Right here. So I have a parallel box that's running, that's running my MetaTrader 4, right? So that way I can just use the Windows version of this and I don't have to worry about it, right? But there is supposedly going to be updates for the MetaTrader. Right now, it's like you can no longer run any 32-bit applications, right? Everything have to be 64-bit. I won't go into details what that is, but just know that you can't run 32-bit applications on Macs anymore. It has to be 64 bits. And the MetaTrader version that people are using, that's still Mac version, it's a 32-bit app. And it needs to be a 64-bit, right? Can you, how many pairs do you focus on during your trading day? Focus on usually 2 pairs, 2 pairs at a time. I usually, because I mainly trade gold and US 30, right? So I'm usually watching those 2 pairs, and I'll usually be trading against each other because they trade opposed to each other most of the time. They trade opposite each other. So I'll usually, if I'm entering in a buy for US 30, I'm entering a sell on gold, and vice versa. If I'm entering a sell on US 30, I'm entering a buy on gold. And I'll just back to back. I got my US 30 window open here, then I'll have my gold window open here, and then on my other screen, I'll have the 4-hour for gold and I'll have the 4-hour for US 30. And I'll just trade between those couple pairs. Like especially during the day, I only focus on those because those move the most. Those do everything I needed to do to get all the pips I want to get. And like my pip goal on a daily basis is at least 83 pips, right? And on a weekly goal, my goal is only 250 pips. And then, so for the whole month, I'm just looking for 1,000 pips, really, right? And I only trade like Tuesday, Wednesday, and Thursday, right? Only trade those days because of my work schedule. So I only get to trade those days. So I'm like, all right, once I get to my pip goal for the day, sometimes I don't try to go any past that, you know. My initial goal is 83. I shoot for 100. If I don't get it, I'm cool. If I do get it, I don't worry about it. And I just stick to that because I don't want to like overshoot. I don't want to get, too cocky. So I just keep to my program. I stick to my script, right? 83 is it. I'm out. If I get more than 83, I'm cool. But if I start losing, I'm done. And I make sure I lock in at least those 83. Was able to download the Hugo's Way Mac version. Right, yeah. Depends on yeah, Tati. It depends on your OS. Like if you're above 10.5, 10.15, 3, or something like that. Like if you got Catalina right now, you won't be able to do it. But if you don't have Catalina, I would suggest you not upgrading it until you get it. Can you put notifications with only MT4 app on phone and be all good that way? No computer. No, you cannot. You have to have a computer to put the notifications in. Like you can't just use your phone to put the notifications in from there because they just don't have it available. I don't know why they don't. It would make sense to do it, but I wish they could too, because I wouldn't mind having that as a feature. But you got to use the computer app to actually put the alerts in to be triggered from your phone or the computer. 83, 83, not 85 or 80, because I trade 3 days a week in most cases, Tuesday, Wednesday, Thursday. And my weekly goal is 250 divided by 3 is 83.3. So that's why I did that. That's the only reason why. That's the only reason why. No other crazy, like, you know, no other craziness behind that. Oh, so I just got that alert, right? This one right here on this alert, right? And you can't hear it because it's in my ear. I'm getting the audio alert and I'm getting the alert to my phone as well. So then the last thing, which I have been talking for a long time, almost 2 hours. I'll send you guys. You hear it? Okay, cool. Okay. The last thing, I guess I answered. Anybody got any more questions, any more how to, what I'm looking for or whatnot, just let me know. If not, man, I appreciate everybody, the 24 people that stayed on. I hope that I answered some questions. And if you want me to jump on again, just let me know. If I was, if you want me to jump on anytime, just let me know. I'm welcome. I'll get on any time, man. So yeah. Appreciate you guys too. Appreciate you guys too, man. Appreciate you, K Dot, for even forcing me to do this. Let me see. Can I think of anything else? Yeah. If you don't also, if you don't have like if you don't have if you don't have the app on your phone, of course you got Drake do. That's good. I would recommend Drake do. And not call levels because they didn't have US 30. But what's another one? You can use TradingView for it, but if you don't have a pro account, then you won't be able to get multiple alerts. You'll only be able to set up one alert at a time if you don't have the pro account for TradingView. But if you do, that's another good one, a good option as well. So yeah, that's it for me. Yep, that's it for me. You guys welcome. Let me know when y'all want to jump on again. I'll kind of have something a little planned out a little better. And that's it. Peace out.